Hey investors, the United States is seeing record immigration through its southern borders. It is estimated that nearly 8 million crossed the U.S. border since President Biden took office. This is likely to lead to a population boom in the USA, and all these people will need houses to live in. Another significant demographic trend is the migration of the population within the USA. Nearly 7.8 million people moved between the states after the COVID pandemic. The states that these people moved most are Texas, Florida, Arizona, North and South Carolina. This is the basis of our investment premise on a homebuilder stock that is poised to benefit from these trends. It has already tripled since 2023, but we think that it has potential to grow more, and so we are looking to potentially enter the stock on corrections. The stock we are talking about is Dream Finders Homes Inc. The stock trades in NYSE under the ticker DFH. Financial metrics. Share price, $31.15. Market cap, $2.92 billion. Price-earnings ratio, 10.7. Dividend yield, does not pay a dividend. Debt, $330 million. DFH was incorporated in 2008 in Florida and has grown rapidly organically and through acquisition to become one of the bigger home builders in the southeast of the U.S. In 2012, they closed 261 homes, and in 2023, they closed 7,350 homes. They also bought other home builders along the way. In 2019, they acquired Village Park Homes, expanding into Georgia and South Carolina markets. In 2020, they acquired H&H Homes, expanding into North Carolina market. In 2024, they acquired the assets of Crescent Ventures, LLC, expanding into Tennessee. Between 2019 to present, they have increased their home closings at a compound annual growth rate of 35%. During the same time, they have increased their revenue from $744 million to $3.8 billion. Their adjusted gross margins have shown consistent improvement as they have grown through economies of scale and currently stands at 27%. Investment highlights. They have a unique land-light, capital-efficient model with attractive gross margins. They concentrate in high-growth markets with low cost of living and solid interstate migration. They also focus on in-demand entry-level and move-up properties. The land-light business model followed by this company involves purchasing lots as close to the start of a home as possible. This is not only capital efficient, but also eliminates the potential that the company will be burdened with mispriced land. This also ties up control of sizable lot positions with minimal capital. This is the main driver for the high return on equity of the company at 34.9% and enhances shareholder returns and de-risks the balance sheet. Finished lots are acquired through option contracts. DFH follows the same land-light model as NVR, another property company. NVR maintained profitability through the financial crisis of 2008. The net debt to capitalization has fallen consistently from 55% in 2022 to almost 23% in 2023. It has gone up to 40% in 2024 from the acquisition of Crescent Ventures, LLC. DFH will benefit from certain factors compared to other home builders. The markets in which DFH operates has seen higher population growth at 1.6% compared to the U.S. national average of 0.5%, and the home prices in DFH-operated areas have increased by 11.2%. Also, the wage growth in these areas has been higher. This will mean higher prices for the homes that they build, leading to better margins. We like the area that DFH operates, especially Florida, Texas, Tennessee, and Colorado. They have strict expansion criteria, including high population growth, strong job creation, and affordable markets. They have grown both organically and through targeted acquisitions. They also have a mortgage joint venture with Jet LLC. The Jet LLC underwrites and originates mortgages across DFH geographic footprint. This provides a competitive advantage over other home builders. If we look at the weekly chart, you can see that the company is in strong uptrend and has sold off recently. The last low has not been broken. If we compare the DFH with the S&P 500, we can see that the stock has outperformed the broader index. We think that it will continue to outperform in the coming years. What are the risks to the analysis? All stock investments are risky in a way. Home builders are especially sensitive to the credit markets. The people buying homes need mortgages to buy the houses. If the credit markets freezes, then the people will not be able to get mortgages to buy the house. Economic recession again is a risk, and selling prices might fall in this instance, and hence the margins. The asset-light model helps, but only to a certain extent. We still think that the company is attractively priced with a low PE ratio, and we think that the company has scope for further growth. So we rate the company a buy. However, this is not investment advice. This is just our own opinions. We highlight companies which are interesting, and then the individual investors must do their own research into the stock before making a decision on investing in them. We are looking at an entry point on this stock for our own portfolio. If the price sells off to around $28 to $26, we think that it would be an attractive entry point for the stocks. We hope that the price will come to that level by October 2024. If we do invest on the first signs of a credit crunch, we will exit the stock. We hope that you liked this video. Warren Buffett was invested in many of the homebuilder stocks last year, but he sold them as they went up like a rocket. The price of this stock has retraced and will start to look attractive below $28. Please comment on what you think about the stock, and we can have a discussion started.